Welcome to Manifested Publishers.
We can be able to move on towards the right of the screen. I had initially mentioned we'd move down, but because we already have the formulas working down, we can be able to just move on towards the right here. We copy the pessimistic case, right over here, pessimistic case. Pessimistic case, and of course because it's capitalized, so pessimistic. Like that. For consistency, just pick that. Format painter, you can see format painter. Also good for presentation. We copy the years 2020 to 2022, like that. Because we're talking about the forecast period for the pessimistic case is going to be different from the base case. Copy. We can, right there, Control V. So we move towards the right, and one of the skills that you should also do or know is that we can be able to just hide this part here. Question is, will we be able to use all of this? We need them over here. So what I can do first of all, guys, before I hide, is to first of all pick these values over here. I'll just copy this, cut this, paste it right over here. Control V. So it moves towards the right. Now if you allow me, I can pick right over here, up to that point, hide. How do you hide? You can, or you can be able to even group it. You can either right click and hide. You can see hide, it will hide. But we are accountants and we are experts like that. What we are saying is that we need to just put groups. So you come to data, then you group. Just click group. It will create this kind of thing. So you just click on this and it will just hide the data like that. If you want to unhide the data, you just click the plus. You open it up like that. That's what true accountants are actually supposed to do. So let's use the grouping outline. Now we come to pessimistic case. The reason for doing that is so that I can be able to look at the question and adjust them based on the inputs or these assumptions which have actually been provided right over here. So in a similar fashion, we forecast these values here, and we've already done that. So I ungroup this and allow me to pick these forecast values here like that. Copy. I press it back there. Control V. That. Now let's see how it actually changes the pessimistic case. We start all over again. I can put a white background home so that we can highlight as we make the changes. No fill, like that. Now we are doing the pessimistic case, guys, so please pay attention. Revenue growth rates are forecast under 3 scenarios, namely base case, optimistic case, and pessimistic case. The base case growth rate is the first year forecast in year 2022 CAGR. This is expected to reduce by 2% annually until the last year of the forecast, subject to a minimum of 15%. The optimistic case is 20% above the base case, while the pessimistic case is 10% below the base case in all forecast periods. So 10%. So what are you saying? 2022 CAGR over here. You can see in section, I can come down over here, 2022, the CAGR is down over here. You can see it right here. So we are saying what? We are saying that we are going to increase our revenue by, for the pessimistic case, is going to be 10% below the base case. So we are saying that even if the CAGR is increasing by 21%, the pessimistic case is going to be below by 10%. So we can come and say right over here, the revenues like in the pessimistic case, so you can click right over here, you can see is 115. So we're increasing this from the previous value, this one multiplied by 1 plus the growth rate which was there in M21A over there. And then once we have that, it's going to reduce by, it's going to be reduced, yes, by 2%, but it's going to be 10%. So pessimistic case, what we can do, we can just pick plus this value times, open the brackets, so 10%, 1 minus 10%, close the brackets like that, and you enter. We are accountants, analysts, we need to highlight that, put a bracket for consistency. Then we are saying that that is for pessimistic case because it's 10% below. And if that's the case for 2023, like that, then you are saying it's going to reduce by 2%, like that. So even if we were to decide to go this other direction, guys, like that, if you're able to go like this, plus that value times, we go to question 21A, this one times 1 minus, we're saying 10%, 10%, it gives us 18, but perhaps the formula should be delete that. No, it's not giving us that value, correct value, so pardon me for that. Let me just undo that. We are saying that it should be able to go down by 20, so 21%, it should reduce by 10%. So we delete here. We are saying this 21% of ours should reduce by 10%. So plus that one times, open the brackets, 1 minus 10%. Then you close the brackets. Comes to 18.8%. Put percentage like that. This is pessimistic case, pessimistic. That 19%. Then what do we do after that? We come over to the second tab, tab 21B, you can see here, and we feed in the formula plus that sales, we multiply into brackets 1 plus this pessimistic rate over here, like that. Then we close the brackets like that and you press enter. So you can see it comes to 113. Because it is like the worst case scenario, we are saying compare that value or this 113 value over here, which you can put in a different color like that, with the one under the base case. Under the base case, you can see is 115 over here. So you put the same color like that. So you can see this is 115 base case, and this you're saying is pessimistic case or the worst case. It comes down like that. So I just undo like that, and then I proceed on. So once we have that, we come back now to what the question was actually saying. So the revenue growth rates, so the pessimistic case, optimistic case is 20% above the base case, while the pessimistic case is 10% below the base case in all forecast periods there. So we then reduce, this is expected to reduce by 2% annually until the last year of forecast subject to a minimum of 15%. So that is the limiting factor. That is the limiting factor over here. So plus this one times, open the brackets, we need the rates over here first of all, sorry. So we come back to 21A over here, 19. So we pick pessimistic case plus that value minus 2%. 2%. We get 16.87, but now we are saying we want it to be consistent like that. We want to reduce the percentages to be only with no decimal places, so it's 17%. Then plus that one times, we're reducing it by 2%. Remember what we did over here, minus 2%. So plus that one minus 2%, like that. We're saying we're getting 14.87. So because 14.87 is less than 15%, so we're saying the constraint is 15%. So this is 2023, 2024, 2025 should be 15%. So we're saying that now this is our 2023 value, 2024, 2025, and right over there. But 2025 should be 15%. Remember from the question, let me come to tab 21B right here. The question was saying subject to a minimum. You can see it over here. Subject to a minimum right over here of 15%. Subject to a minimum of 15%. So what does this mean? We're saying that we can come over to this other side over here as we try and populate this part. So we're saying it's plus that value times, shift, open the brackets, 1 plus for 2024. So we come back to 2024, we're saying it's 17%. That, we close the bracket, enter. Then these others will be 15%, 15%, 15% over here. So plus that value times, open the brackets, 1 plus 15%. 15%. That is the maximum, or the minimum we cannot go beyond that, beyond that value. We do the same, plus that one times, open the brackets, 1 plus 15%. We close the bracket, enter that. Then we can be able just to, even if we drag that, it will be able to pick like that. It's that value like that. So I was just doing it slowly so that we can be able to just see the values there. The cost of sales, we've been given the gross profit margin. What have we been told in the gross profit margin? The question right here, you can see the gross profit margin. Let me just put it in beige, somewhat color like that. The gross profit margin for the first year forecast is the 3-year average for the period 2020 to 2022. So this is expected to reduce by 2% annually until the last year of forecast, subject to a minimum of 50%. So what is the gross profit margin? So I can come over here, move towards the right, and we reduce this base case scenario here. How did we do the gross profit margin? The gross profit margin is gross profit over sales. So the gross profit over sales, this one we had already done it like that based on 2020 values. So you can see, even if you're to pick this value over here, or we pick, let's say 2020, you can just decide to pick it over here, plus gross profit, which is over here, gross profit divided by sales, like that. 0.5. So for consistency's sake, we do the same right over here. 50%. And it applies all through until 2022. So we're saying that as far as gross profit margin is concerned, we are expected to apply these same rates that we have right above over here. So I can comfortably delete this one over here like that. I delete and say that now for me to be able to get the gross profit, I'll just get, you can see the gross profit right over here. You just multiply gross profit margin times the sales. So gross profit, so I get plus gross profit margin, 57%, multiplied by the sales. There, I get it like that, 64. So I drag the formula like that and it picks. So for us to get the cost of sales, we just get plus 113, but because it is minus, we open the brackets. You can see on the formula bar right over here. We just delete that, say is equals to minus that value minus that value there. We close the bracket, say enter. And we drag this towards, pardon me, undo. So plus or is equals to minus, open the brackets, 113 minus 64, close the brackets, enter 4, then we drag the formula until we get the plus sign like that. We drag the formula like that. Then we put it in terms of the format. Just put it like that. So we can try and check. Plus that plus the cost of sales, we're getting 64,381, 2.29. So we can just, put it like that. And you can see we've gotten the correct answers like that. So we delete operating expenses. We go back to the question, right down here, highlight in peach. Operating expense ratio are modeled as the 3-year averages from period 2020 to 2022. These are assumed to remain constant over the forecast period. So what are we saying? We are saying that the expense ratio will also apply across. You can see the expense ratio just down here. So we pick, for us to be able to compute the operating expenses, because we've already done that in first part here. The operating expenses is just the sales times the expense ratio. So for us to get this, it is just plus the sales times the expense ratio. The expense ratio is right over here. Enter. But remember, it is negative. So we put a minus there and we open the brackets like that. Picks negative. And we just drag it, formula, like that, and it picks. Do the same thing as we've done above, format, that it picks the same format. How about operating profit? Let's see what the question is saying about operating profit. There's nothing about operating profit. It's a formula. So it's only operating expenses was there. So plus, it should be the same, plus that. You should get 42. Drag it like that. Let's see what they say about depreciation. Yes, there's something on depreciation. It's right there. Depreciation to revenue ratio is assumed to remain constant as the 3-year average for period 2020 to 2022. So we apply the same formula we've done just over here. You can see it right here. For us to be able to get the depreciation value, sales times depreciation ratio. So we come back towards the right over here, pick like that, time plus sales times depreciation ratio for 2023. Is that correct? Yes. Enter. And that's it. We drag it. That. It picks. But you can see clearly it's not the same format as this other one. So we do the same thing. Minus, open the brackets, close the brackets, enter. And then now we can redrag it again. Just drag it like that. It picks the negative sign, format, just do it like that, and that's it. Then we can just say profit before tax plus that. That. And of course, because this also requires the formula, you can see it will not change anything. But the format will change. So let's just undo that. We ensure that the format is the same as the previous income statement. So we just copy it like that, and that's it. What are they saying about finance costs? The finance costs down here, the finance costs are expected to reduce steadily as the loans are repaid. Use the reduction rate 2022 over the forecast. So you can see here reduction rate is 1,000 based on the base case, like that. Let's see how much it's reducing by in this case over here. It's reducing by still 1,000, 1,000, 1,000 like that. So how do we feel it? We just say plus this one plus that, so that we can be able to get 7,000. And we just apply it across. Format painter, do the same there. Profit before tax plus that plus this value. And we drag like that. How about the income tax expense? Let's move over to the right, to the left rather. Finance cost we've just done. Let's go to income tax. Is calculated as the historical effective tax rate. Put it as pitch, because we are saying it's just going to be plus that value times the 30% 2023 value there. That's it. Because it's negative, do the same thing. Negative, open the brackets, put it in brackets, like so. So you come over there and just drag it like that. We drag the formula as we move across like that, and then we get the final profit after tax. Plus that, enter. That's the final value that we have. So you can compare. You can see in the year 2023-7 forecast, we are getting 40,000 as the profit after tax in the pessimistic case. How about the base case? Let's remove this plus sign over here, the base case. We are getting 42,694 because it should be higher than this case over here, which you're saying is pessimistic case. So let's now put the format, we just put the paint, or rather the format, we try and format this whole part like that. And that's what we've done. That. So once we have that, we can then just move ahead to the base, to the optimistic case.
Welcome to Manifested Publishers,